Hey everybody, how y'all doing? It's Crendelacremeinvestments and Wellness back at you again with another video. And today I'm going to be talking about market structure. I'm going to try to make this as simple as I possibly can because honestly, once you get market structure, that's what everything comes down to, market structure. Whether you trade smart money, whether you trade retail, whether you trade wedges, whether you trade breakouts, whether you trade break and retest, it all kind of works at the end of the day because it's all psychological levels and market structure. That's pretty much what trading all the way breaks down to. You can call it different things, and I just preferably trade smart money concepts because you get better risk to reward for your or better return on your risk. You can get a lot of 10 to ones, 12 to ones. I got videos on that, but so I'm just gonna go ahead and draw out just basic market structure. As we all know, if it's uptrend, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. And downtrend, same thing, or reverse. So lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, and so on. All right, so essentially, in the smart money concept way, or any kind of way, essentially what you will do is you will see the market making higher highs and higher lows on a bigger time frame, consistently higher highs and higher lows if we're looking to buy. And then once it comes down to an area, and based off these areas, a lot of traders use a lot of different things. But for me personally, since I trade smart money concepts, I use institutional moves and institutional moves and institutional blocks um, to identify my preferably supply zone and demand zone. Some people use support and resistance. I use order blocks and institutional moves to identify my area of interest. So I'm just gonna put of interest, AOI for area interest, right there. So essentially, we'll wait for the market to pull back here, and let's just say this is a 4 hour time frame, essentially, or just a bigger time frame. And so this is a 4 hour time frame, and now once we've identified our order block or our area of interest on the bigger time frame, we drop down to a smaller time frame, so just like the hour or 30 minute, to look inside of here and wait for our other confirmations. And once we're inside of here, that's when people will either look for, well, I'll look for either some form of Wyckoff, breaker structures, and the continuation to buy up. Get involved there. Just color that so you can see it a little bit better. And then it looks something like with a stop loss. Right below there. It's targeting another high, so it looks something like that. Or people would look for some form of it, and it's all the same thing once you kind of look at it, but some people look at wedges. They'll look for some kind of squeeze here, and the market would just kind of consolidate, consolidate, and then break out. Some people will then buy the retest of the breakout to continue it up, or some people would just buy the break structure to buy up, or people will look for certain things like channels in here. So market will ascending channel, something like this. It breaks up. I'll draw this channel here. I don't use necessarily channels to buy. I use Wyckoff, but it's kind of showing you all the levels that kind of happen at this stage. And it's essentially the same thing. Just identify your area of interest. I know where you're at in the market, and then get on a lower time frame to identify how to get in and confirm your entry on those areas to really get a smaller risk to reward. But that's essentially what market structure is. But how people really get confused is it's not as simple as a lot of people will just say the market is just all right. So it's on a daily doing this, making higher highs, higher lows, higher highs, higher lows, and then they assume. And then I see a lot of people explain it like this, and you get down to a lower time frame, and then you're just seeing essentially this, just miniature higher highs and higher lows. Essentially, that is what it's doing. So let's say that the bigger time frame is a 4 hour, and this smaller zigzag line or uptrend would be like a 30 minute or 15 minute doing the same thing. But we'll usually see the bigger time frame doing this, and then inside of this expansion right here, I just zoom inside this expansion, it won't be doing consecutive higher highs and higher lows. It'll do something like this, back down, back down, come here, and then eventually make an uptrend. But it's not as clean as just a higher highs and higher lows. So essentially, you have to identify where you're at and not get confused on those small time frames and stick to your area of interest on the bigger time frames. All right. So we'll eventually come over to the charts and I'll show you a live example. So as we can see here, we're on the monthly. So as we can see the market, higher low, or higher high, higher low, higher high, higher low, higher high, looking for the market to make a higher low. So like I said, after we've identified that area of interest, I use order blocks and institutional candles. Some people use a lot of different things. We'll go ahead and mark that. And essentially, we'll just wait for the market to come back down there or back into there and wait for your own individual confirmations. I personally do Wyckoff. And as you can see, we drop down to a daily. We're on the monthly. Now you go to a daily. And as you can see, the market just didn't make consecutive lower lows, lower highs. It came back up here and then continued. Came here, then came back up here, made an uptrend, and now it's trending back down. So it's not just as simple as a lot of people explain it. So the key to not getting confused is sticking to your higher time frame area interest. Do not chase the market. That's what a lot of people call chasing the market. Do not chase the market. Let the market come to you. So as we can see here, let's see if I can identify anything. All right, so let's say here, this right here would be a smaller, higher time frame area of interest within the area of interest, that the bigger time frame area of interest that we're already looking at. So we'll go ahead and mark that up using a lot of different concepts that you can probably go back and look at some of my old videos, like institutional blocks, institutional candles, liquidity, a lot of different things. But essentially, I just want to show you market structure in this video. All right, so after we get that high time frame area interest marked up, we'll come in here and wait for a distribution off of that institutional candle. As we can see here, we have institutional block right up here. Set our stop loss right above those highs, and then we'll take it down, of course, partially. Okay, so that's essentially how you'll look for market structure. It's all fractal. The market does the same thing over and over again. And the quicker you can kind of train your eyes to see that, the quicker you'll become consistently profitable and just be a better technician within the markets. All right. So I hope y'all enjoyed that video and kind of helps you understand market structure just a little bit better. Crendelacreme out.